Assalamu alaikum and welcome to today's lecture. So before dive into our topic, I just want to ask a simple question. What happens if a company discover a major loss after the year end, but before the financial statements are approved? Should the numbers be changed or just disclosed? I can answer this critical question. So in this video, you will learn how to identify adjusting and non-adjusting events after the reporting period. Okay, so here we have the agenda of our today's lecture. In our today's lecture, I will be sharing with you all the definition related to IAS 10, its scope, like what it covers, what it excludes, core rules, which includes measurement, recognition, presentation, disclosure, step-by-step framework, one small example, common mistakes, and key takeaways. Okay, now we have a definition relating to IAS 10. IAS 10 prescribes when and how events that occur after the reporting period should be recognized or disclosed in the financial statements. Its measurement include updation of carrying amount of assets, liabilities if affected by adjusting events, use reliable measurement techniques. Okay, here we have a timeline. I prepared a timeline to get the better view of events and better view of the IAS 10 concepts. Okay, now here we have XYZ company. XYZ company accounting year starts from 1 January 25 and it's end on 31st December 25. 31st December 25 is its reporting date. Its financial statements will be approved and authorized on 30th April 26, which is in next new accounting year. Okay. Okay. Any event that occur after the reporting period and before authorization of financial statements will be treated under IAS 10 even after reporting period and here we have we will be discussing two types of events in our lecture, adjusting events and non-adjusting events. If any condition exists at year end, for the transactions, those type of events and transaction will be adjusting events. And if condition doesn't exist at year end, those type of events and transaction will become non-adjusting events. So what does condition exist mean? Here I created a simple example here. Condition exists at year end. We have a legal case. At year end, a lawsuit was already filed against the company and lawyer advised that loss was likely. After year end, court decision confirms the company must pay damages. So it became our adjusting events. Obligation exists at year end. Okay, now we have some example of adjusting events and non-adjusting events. Adjusting event includes customer bad debt, fraud, provision settlement, inventory sold less than cost, insurance received, court case, receipt of info about asset impairment that occur in our financial year. Okay, non-adjusted event includes share issue, inventory asset destroyed due to fire, currency rate changes, tax rate changes, subsidiary buy, investment fair value changes, major acquisition after year end, change in tax rate after year end, and dividend declare after year end. Okay, so now if events are non-adjusting but they are material, now in this case what we need to do, we need to disclose them, the event, we need to disclose their event and event financial impact on financial statements. Okay, one thing which is very important in IAS 10 is that always link IAS 10 event to going concern if there is doubt about the entity's ability to continue. In this case, all event will be adjusting events and financial statement will be prepared on a breakup basis. Okay, another thing that I wanna mention here about dividend. Okay, Okay, here we have a very important concept and very important point in IAS 10, which is dividend. Dividend, if a company propose dividend, so there is no accounting treatment for proposed dividend. But if it is declared, now we need to see whether it is declared before year end and after year end. If it is declared before year end, it means that it is recorded in our financial statement, right? And if it is declared after year end, it means no condition exists at our reporting date. So now in this case, the dividend will become non-adjusting event, and such type of dividend just require disclosure in disclosure notes. Okay, here we have a example of bad debt. A company reporting date is 31st December X1. At year end, customer owed 150,000 rupees 150,000. On 12th Jan X2, before the financial statements were authorized, the customer was declared insolvent and unable to pay. Why this is an adjusting event? Because the condition existed at year end. Okay, the customer financial problem existed at year end at 31st December. Insolvency after year end confirms the bad debt condition. It provides evidence of impairment at the reporting date. Okay, what will be the accounting treatment for that? Adjust the financial statement and recognize the bad debt expense. Okay, we are here. We have entry for that adjustment. We will debit depreciation bad debt expense with a 150 amount and credit trade receivable with 150 amount. Okay, here we have a step-by-step framework relating to IAS 10. First of all, what we need to do, identify the event date. Secondly, did the condition exist at reporting date? Adjusting, non-adjusting, and step 3 is adjusting. Our event is adjusting, adjust accounts. If it is non-adjusting, disclose only if material, and lastly, consider going concern impact. Okay, now we have some common mistakes relating to IAS 10. First of all, adjust events that occur after authorization, forgetting disclosure for material non-adjusting events, ignoring going concern implications, writing journal entries for non-adjusting events. Okay, here we have a quick key takeaways. IAS 10 is about timing and evidence. Adjust if condition exists at reporting date. Disclose material non-adjusting events. Okay, that brings us to the end of the day. Thank you for watching, and I'll see you in the next video. Allah Hafiz.